my first question to you is about superannuation, because this is an important aspect for small business owners. A lot of SMEs, overlook superannuation as such. Now, can you tell us from the budget, what were the main changes that we need to know?
Yeah, thanks very much, Dinesh. Obviously not technology related or innovation related, but still, important for small businesses and also the individuals associated with small businesses to understand their superannuation requirements. Super has gone through a reform over a number of years now, and there's a further reform that's happened in the current budget. A few things I'll mention over pretty quickly. We used to have a $450 exemption threshold. So anybody, let's say one of your employees earned less than $450 a month, you didn't have to contribute super. Now that threshold is gone. So even if you can get somebody to do a little bit of piecemeal work where you're paying them less than $450 a month, you still need to now include them for super. The second one is more for individuals, not for companies, but the individuals associated with super. The government introduced this voluntary contributions. It's called the First Home Super Saver Scheme. It's increased that from 30,000 to 50,000. So you're able to now put money into super to save towards your first home, which is everybody's dream, I guess. So that's been increased from 30,000 now to 50,000. Access to super, on retirement, when you get to 60, and again, this is impacting individuals associated with small businesses, could be shareholders, could be directors of these SMEs that we're talking about. So when you reach 60 and you're selling down your home, you can boost up your super. So that's been now increased to 300,000 per spouse. So let's say a couple running a small business get to 60, they've sold their business, they can now contribute, $600,000, $300,000 each into their super. And we know that super is very effective in retirement because that money then rolls into what we call pension phase. And then in pension phase, you're not paying any tax in your fund, and you're also not paying tax on the amount that you're withdrawing as a pension. So that's been increased to 300,000 per spouse. There used to be a work test for super contributions between 67 and 75. So once you reach the age of 67, you had to satisfy a work test, which was I think 30 hours or 40 hours in a month, if I remember the numbers correct. But that work test is gone now. So you don't need to satisfy work test. The government saying you can carry on contributing to super until 75. The last one is just an administrative measure. This is for super funds where you have, let's say, 2 members, or you can have up to 4 members in a self-managed super fund. Couple could be in accumulation. Let's say the children could be in accumulation. The parents could be in pension mode, and it gives discretion to the trustee to calculate the exempt income. So it's really for your super fund accountant. So which says that there are different methods of calculating the exempt income, and the discretion is given to the trustee. So there are about, how many mentioned? I mentioned there are 5 there. The ones that are relevant really for a business is to make sure that they're contributing to their employees from $1 now and not from the $450 previously.
Raj, thank you very much. Very extensive, mind you. What else would I expect from you, having spoken to you all this time, all these years? Now, Raj, not just super, at this time of the year, business owners also worry about their personal income tax. What changes do they need to know?
Yeah, so I think the government recognized, and some people call this what they call election sweetener, right? It's just recognizing the fact that there is cost of living pressures on people, on SMEs, their owners, and so on. So they have increased what we call the low and middle income tax offset by $420 to $1,500. So there's an increase in that tax offset of $1,500. And that applies for this year for the 2020. So one-off measure, so applies for this year. So what that means is that you can now get up to $1,500 back depending on how much income you're earning. I think it caps out at about $126,000. So once you get $126,000, it doesn't apply. But anybody earning less than $126,000 have an increase in that offset by $420. The other big thing that's going to come in, this is 1 July 24, so that's a couple of years away, is the tax reform for individual tax, right? So I remember on the last time I was on one of these with you, Dinesh, the year I came to Australia, the year 2000, I think the highest marginal tax rate kicked in at $60,000. So you paid 47% at 60,000. So from July 2024, it'll kick in at $200,000. So the highest marginal tax rate at the moment kicks in at 180,000. It'll kick in at $200,000. And they're also removing the 37.5% tax rate, and they're reducing the 32.5% tax rate to 30%. So what that means is that anybody earning between $45,000 and $200,000 as of July 24 will pay 30% tax. Which is, I think, is a fairly competitive tax rate when it comes to individual tax rates, right? So 30% between 45,000 and 200,000, and about 200,000, then you're paying on the 47%. So that's just a marginal tax rates reform. I think we had 6 marginal tax rates back in the year 2000, and now we're getting down to 3 marginal tax rates. So simplifying the tax system and saying that bulk of our people will pay tax at that 30% tax rate, which is the corporate tax rate for large business at the moment, right? So it's just linking to that rate.
Thank you. That should be attractive for people because it's easy to calculate, less confusion, hopefully, as well, isn't it?
Yes, absolutely. Absolutely.
Raj, we are now at that time of the year. We've got to start planning for 30th June. So as we head towards the end of the financial year, what tax planning considerations must business owners do at this time?
Yeah, good question, Dinesh. So we're middle of April, like a couple of months to go to the end of the financial year, right? So we talked about those 2 initiatives that came in this year, which is the training one and the technology boost. So obviously you want to make yourself avail of those, then obviously spend that money between now and 30 June. And also the couple of measures that were from the previous budget, which carry on to 30 June 2023, which is the temporary full expensing. So the temporary full expensing is still available for new assets for companies with revenue up to $5 billion. So that's quite big. So companies up to revenue with $5 billion can buy new assets between now and 30 June 2023 and expensing in full rather than depreciate over a number of years. And SME businesses, which is the $50 million revenue test. So if you earn less than 50 million or you make less than $50 million in revenue, then you can apply to new assets as well as used assets. So you can buy used assets, so buying a motor vehicle, buying any machinery, buying equipment, investing in a new website, anything can be claimed under that provision between now and, as I say, it goes up to 30 June 23. In the budget, the government did not seek to extend that. So we don't see that extending beyond 30 June 2023. It was a COVID measure and it's been left in place. So these measures, even the technology boost, the additional extra 20% only goes up to 30 June 2023, right? Not beyond that. And the loss carryback as well, which is still available, right? I think we spoke about that last time. Again, that recognized the fact that companies could be making losses through COVID in FY21, FY22, which is the current financial year, and then FY23, which is the next financial year, and allows companies that make losses to carry back those losses. You normally carry forward losses, but allows you to carry back those losses and offset that against profits you made in FY19 and FY20, right? So you can go back up to FY19. So a good thing would be, for example, let's say you're investing in some technology, and as a result of that, you're claiming your 120% tax deduction, you're incurring a loss. So now you're going to be able to take that loss back. And if you're paid tax in FY19 or FY20, claim that tax back as well. So that's an additional incentive, again, something for you to work with your accountant, right? So these are the measures that are really COVID type measures that were in place that are flowing through to 30 June 23. Apart from that, the standard year-end stuff, Dinesh, in terms of super contributions, the super contribution cap per employee is $27,500 for this financial year. Last year was 25. So obviously work with your accountant, work with your financial planner. If you want to get that into super, you've got to get that in before 30 June. You can't leave it till 1 July. It's got to be in receipted by the super fund by 30 June in order to claim a deduction. And also generally just looking at your year-end cutoff, right, which is a traditional planning measure that's always been there, bringing forward any expenses that you want to bring forward in the current year and sort of deferring income into the next year, right? So that's really timing. So working on those. And it's important to have up-to-date financials. One of the things we talk about now with SMEs a lot is with technology and the real-time access to information is that you're looking at your information on a regular basis. So you know exactly where you're at. As at the end of May, I had a client last week where we spoke about declaring an interim dividend for this financial year. It's a $10 million business, and the CEO commented that we have real-time information now. We can make that decision in July. Previously, we would have had to wait another 6 months till the accounts are drawn up to work out how much profit you've had, to work out what dividend you can declare. Whereas now he announced to the employees that he'll be declaring an interim dividend soon after the end of the financial year. So obviously keeping records up to date is important. But yeah, so those are the measures I think to look out for between now and, one other is if you're debtors, look at your debtors, bad debts. If you've got bad debts, the requirement is to obviously collect the debtors as much as you can. But if you want to write a debt off, write that off before 30 June. The requirement is to write off before 30 June. And also if you're a business carrying stock, look at your stock and see whether stock is obsolete. Get rid of stock or value the stock at obsolescence value, or if it's worth less than what it is, then we'll value it down. So because reduction in stock also helps reduce the amount of tax you pay. So again, traditional things in terms of debtors and stock, looking at that between now and 30 June.
Raj, thanks very much. Business owners, there you go. You heard a host of things we can do before 30th June. Raj mentioned with regard to debtors, with regard to stocks, with regard to superannuation, with regard to even paring back losses that you make now, which you can claim off the profits you paid, tax you paid on your profits years, a few years ago. Now, with all that, we also know that right now we can prepare ourselves for the future. We can prepare ourselves for a new digital future. That is the future because the pandemic has accelerated digital adoption of consumers by 10 years, according to research done by McKinsey. What does that mean? Consumer adoption of technology, what would have happened by 2030 happened at the end of 2020. Now, what does that mean for us? What it means is that the businesses who can engage these consumers who are looking for technology-related products and services and to consume products and services using technology, that we can be in front of them. We have a huge benefit. And the government now have come up with a host of incentives up to 100,000 this financial year, and the next financial year, another 100,000 for us to get deductions, not at 20%, but at 120% of our expenditure, of our investment. We also heard from Sandie Boswell, who is an expert in innovation, and who spoke about the R&D grants, about the patent boxes. Now, some of these terminology must be new to you. Of course, it's new to all of us. Now, we can reach out to these experts. We can find out from them what steps we can do. Like we've heard 1,000,000 times, a journey of 1,000 miles starts with the first step. If you want to learn about innovation, incentives, you can reach out to Sandie and Raj. If you want to know about digital adoption, where you can start with bridging that digital divide, using those incentives for your company, talk to anybody at NetStripes.